Federal Reserve is expected to raise interest rates 0.5% this afternoon to battle rising inflation. It's the first of what could be several incremental rate hikes over the next year. Meanwhile, President Biden just announced a little while ago that the federal government will pay down the national debt this quarter for the first time in 2016. ABC News financial contributor Alexis Christoforous joins me live now for more on this. Alexis, let's start with that announcement by the president. How significant is it for the U.S. to now start paying down the U.S. national debt?
I think in the long run, it's very positive, and it means that we're able to pay off our bills, and that's a good thing. What it doesn't do is bring us any relief right now with inflation at a 40-year high and Americans paying more for just about everything. You know, Joe Biden today trying to highlight his economic successes. That's definitely one of them, being able to get the deficit, pay that deficit down. We're having a falling deficit for back-to-back years. First time we've seen that in a very long time. But again, it doesn't really get to the heart of what's on consumers' minds right now, and that is runaway inflation.
And the Fed is expected to raise interest rates today, or announce they're raising interest rates today. How does that tie into this, and how's that going to impact all of us, our wallets, and what we see at the grocery store?
That's the question at the end of the day. And President Biden's not the only one trying to fight high inflation. It's also the Federal Reserve. It is one of their mandates, and they are expected to get really aggressive here and raise short-term interest rates by 0.5% this afternoon. It's the first time they will have done that in more than 2 decades. And in short, what that does immediately is make it more expensive to borrow money. And we came up with a few ways you're going to start to feel that right away. Let's say you're out there looking for a car. Auto loan rates are going to be going up. Also, we're going to be paying more for credit cards. Those rates go up. Home equity lines of credit. Also, you're going to pay more for those. On the plus side, though, if you have money in a CD, a certificate of deposit, or a savings account, those accounts will be making you a little more money. But we got to talk mortgage rates, because that's everybody wants to know, what's this going to mean for mortgage rates? So the Fed funds rate, not directly tied to mortgage rates, but it does sort of have an ancillary impact on those rates, and they're already quite high. 30-year mortgage rate now averaging above 5%. This time last year, it was just under 3%. That's about $370 more per month in your monthly mortgage payment. So these are real expenses for people. We're going to be feeling it. And the reason why they're doing all this is they want us to spend less. I know that sounds odd, but they want to try to slow the economy down enough that demand will get lower and inflation will start to pull back.
So how long does it take for this to have an impact? You know, when do we go to the grocery store and stop seeing prices skyrocketing?
Yeah, it's going to be a while. I mean, the rise in interest rates and their impact is pretty immediate, but it's going to take time to filter through the economy. A lot of people are still sitting on a lot of money that they didn't spend during the pandemic, so they still feel okay about spending, but we're seeing survey after survey. There was a recent ABC News poll showing that people are starting to pull back. They're starting to rethink their vacations for the summer. How are they going to spend their money? What do I need versus what I want? And those things are going to take time. And the hope by the Fed is that we're going to start to see inflation peak and then pull back the beginning of 2023. So we need to hunker down, because it's going to be high inflation at least through the midterms and probably longer.
So what's your advice to viewers watching right now that are thinking, okay, so what does that mean? What do I do with my money, either in savings, or how do I kind of manage my spending?
I think it's really tough to try and outpace what the Federal Reserve's doing. I mean, if you haven't locked in a mortgage rate now, you need to understand that those rates are going to be higher in the coming weeks and months. The Fed has already pretty much telegraphed that they're going to be raising rates aggressively for at least the next couple of months. So, you know, if you do not want to or do not have to buy a new home right now, perhaps waiting a little bit is the best course of action for you. Save whatever you can. If you are working, maybe go to your boss and say, you know what? The price of living has gone up, and I'd like a raise. Lots of companies are doing that now because they need to retain the employees they have, and so they are paying more. You know, ironically, though, paying more, those higher wages, is inflationary in and of itself.
Right. It's all. I know it's a delicate dance that everyone's trying to do. What are you looking out for, both from the White House? We know we're heading into midterm elections. Joe Biden has proved weak in polling numbers when it comes to the economy. So we know the president is going to be trying to appease voters and make them know that the White House is on their side and trying to work toward the economy. At least that's the messaging from the White House. So what are you looking out for from that perspective, and also from the Fed?
Well, from Joe Biden's perspective, he wants to try to assure the American people that he is on their side and trying to put money into their pocket. He does not have many ways he can do that. He's done pretty much all he can in terms of saving us money at the gas pump, tapping into the strategic petroleum reserves, looking for ways to up the way we produce and how much we produce oil in this country. So there's only so much he can do there. Some tax holidays are happening on a state-by-state basis. I think what you're really going to see in terms of bringing inflation down is coming from the Federal Reserve. They have a couple of things they're going to do. They're going to continually aggressively raise interest rates. We're all going to feel that pretty immediately. And they're also going to buy less government bonds and something called mortgage-backed securities. They were buying those up on a monthly basis in a big way throughout the pandemic so that they could pump money into the economy. They're going to start rolling that back. So a 1-2 punch, if you will, for high inflation.
All right, a lot to keep an eye on. Alexis Christoforous, thank you.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.